Hello, everybody. Today, I'll be giving my 26th lecture series, and this lecture series will be based on the money market part 2. On my 25th lecture series that happened actually yesterday, I've given the deliberations on the money market part 1. So, if you see that a particular lecture series, 25th lecture series, you'll be able to understand the concept of the money market and how actually it is a very important one of the important component of the financial market is divided into two parts, two markets. One is a money market, another one is a capital market. And the main area which revolves around the money market is obviously the many factors which are involved in it. So I have ended with the a kind of an interest, a brief introduction of the money market and how it operates, and who are the participants of the money market. Actually, the money market consists of the financial institutions and dealers in money or credit who either want to borrow or lend. So we can understand financial institutions means also the banks and the financial institution. It also includes the NBFCs. Now participants borrow and lend for a shorter periods, typically up to 12 months. I've told that the money markets actually operates below 1 year or 1 year or less than that. So money market trades in short-term financial instruments, commonly called the paper. The instruments will be called a commercial paper, a certificate of deposit, COD, it's called. Then the contrast with the capital market for a long-term funding is supplied by bonds and equity. I mentioned that the capital market is mainly basically for the long-term purpose, and money market is for shorter version. And very important thing is this is to be supplied by the bonds and the equity. Now, the heart of the money market revolves around the concept of interbank lending, where the banks lend and borrow from each other by using the commercial instruments such as the commercial paper and repurchase agreements. I will come to this point. This is a very important area to understand. If somebody is preparing for the UPSC or the PSC or WBCS or any kind of examination competitive, that how the money market operates and how the funding takes place. It's an interbank funding. Like we take the funds from the bank or borrow the funds from the bank for the purpose of our own needs. For example, home loan, car loan, personal loan, credit card. These are all kind of borrowings. So they have also borrowings like interbank borrowings, and that interbank borrowings or interbank lending takes place by through financial instruments, and these instruments are actually commercial papers and repurchase agreements, and these instruments are often valued with reference to the London Interbank Offered Rate. This is called LIBOR for the specific term and the currency, because obviously the interbank rate should be there. Now, the most important thing is to understand over here is that the finance company usually secure their funding by issuing a substantial amounts of the asset-backed commercial paper, and this paper is backed by the commitment of valuable asset. It's called asset-backed commercial paper account. Now these assets, actually these are conduit. Conduit means it's a conglomeration of various assets. These assets can include the things like auto loans, for example credit card receivables, like residential or commercial mortgage loans, mortgage-backed securities and other financial assets. And some large financially stable corporates or corporations can even issue their own commercial paper, which while others have to prefer to the banks issue it on their behalf. Now, in the United States, federal and the state governments also issue paper to meet the funding needs. How? For example, I've told you that in India also it happens in the same way. In US it is called federal government, and in India we call it union government, and they have got the provincial governments and we have got the state governments. So they also need funds. So they also issue some we issue treasury bills and they issue paper to meet the funding needs. And the state and the local government issue municipal paper, while the treasury, US treasury and treasury bills to fund the US public debt. Now, trading company often purchase the banker's acceptance to tender the payment to the overseas suppliers. For example, what is this example? For if anyone is dealing in any kind of trading, export or import, obviously what happens is that when you are exporting a product from here to India to abroad, then obviously you are going to get your payment through the banking channels. That is, the payment will come from the import side, from the US side, or from any country that you are sending the goods. It will come to your own bank account in India. So what happens is this: they will place that particular the bills of exchange in their own bank in India, the exporter, and subsequently your bank, the local bank, will fund you the 90% of the amount which has been given as a bill. Okay. Now the very important thing over here is to understand that how this it takes place, like retail and institutional money market funds, banks, central banks, and cash management programs, and merchant banks. So very important to note over here is also the money market serve five functions: to finance trade, to finance industry, and to invest profitably, either commercial bank self-sufficiency, and to lubricate the central bank's policies. Now the money market plays a very crucial role in the domestic and the international trade, and commercial finance is made available to the traders through the bill of exchange, which are discounted by the bill market. The acceptance houses and the discount markets help in financing the foreign trade. What is the financing industry? The money market contribute to the growth of the industries in two ways. Number one is that they help the industries to secure the long-term loans to meet the working capital requirement of the system of finance bills and the commercial paper. These are kind of a short-term thing. Industries actually generally need long-term needs. For example, if I start a business, or if any one of you start a business, then you need a long-term fund and a short-term funds. Short-term funds are actually meant for the working capital requirements, and the long-term funds are actually need for the capital budgeting. For example, you are going to purchase an asset. You're going to invest the amount of money in the for parts of a building, to start a factory, to start an office. So in that case, what happens, which are provided in the capital market. However, the capital market actually depends upon the nature and the terms and conditions of the money market also. They are quite interrelated with each other, the money market and the capital market. The short-term interest rates of the money market actually influence the long-term interest rates of the capital market. You will know there is an interest rate which is being regulated by the Reserve Bank of India. So any kind of banking rate which is regulated by the Reserve Bank of India, for example, in case of us in India, or any central bank authority throughout the world, those banking channel, those interest rate of the repo rate has got a very unique connection or interconnection with the capital market, and how the indices of the stock markets actually gets the momentum, or gets an upbeat, or it is bearish or bullish in nature. Now, thus the money market indirectly helps the industry to its link with an influence on the long-term capital market. So today I end the session with the financing trade and the financing industry, actually how it operates, the functions. There are many functions, like how the profitable investment takes place, how the money market helps in the self-sufficiency of the commercial banks, how it helps to the central bank, how and what are the kind of instruments which are available. I will come. Like for example, I mentioned repurchase agreement and certificate of deposits, commercial papers, euro-dollar deposit, farm credit system. There are many federal funds, municipal funds. There are many kinds of instruments which are available in the financial market, and how the recalling of the old short loans from the money market can be done. So these areas we need to study. From the academic side, obviously you have to study much more deeply. For example, for understanding these instruments in the money market, those who are students of the chartered accountancy or cost and management accountancy or company secretary, they have to understand the concept of the money market and capital market. What are the instruments which are involved? How they function in providing a kind of a funding for the long-term needs or the short-term needs for the industry and the government as a whole. So I thank you, each one of you, for watching this session. Thank you very much.